We've seen the bankruptcy of several large-profile EV companies already: Electric Last Mile Solutions, Lordstown Motors, and most recently, the electric bus company Proterra. And with many of these other EV manufacturing startups losing hundreds of millions of dollars, plenty of these companies will go defunct before the EV market matures. Rivian, Lucid, you name it, have had their stock prices decimated over the last couple years. So clearly, investors have not learned their lesson because VinFast Auto, a Vietnamese EV company, just merged with a SPAC to list on the Nasdaq and had their share price jump 200%, although we have already seen that stock tank from its high. We'll talk about some factors in the video that might have contributed to this pump and dump, but fundamentally, is VinFast worth investing in? In this video, we're going to find out. VinFast Auto is now listed on the Nasdaq under the ticker symbol VFS after their SPAC combination with Black Spade acquisition, and the market cap reached as high as $85 billion, which comfortably valued VinFast higher than Rivian, Lucid, and NIO combined. The market cap has already collapsed from that price point and now sits at around $35 billion as of the recording of this video. The company originally started out by selling electric scooters, quickly transitioning to producing automobiles as well through traditional combustion engine cars. By the end of 2022, the company had produced 145,000 e-scooters and 88,000 ICE vehicles, cementing their position as the largest auto manufacturer in Vietnam. So this led the company to pivoting into electric vehicles in January 2022, when they announced that they would phase out all production of ICE cars and launching 4 new EV models so far. At this point, all the company's vehicle production has been in their own manufacturing plant near the city of Haiphong, which supposedly has the capacity to build up to 300,000 EVs annually, although the company's only sold 11,300 so far this year. Taking a look at their expansion plan here, although the Vietnamese market for cars is growing significantly, the company is forced to expand globally due to its current insignificance. So they are expanding their operations into Europe and the United States, primarily focusing on the US, as they're building out a new manufacturing facility in North Carolina, and they expect that plant to have an annual capacity of 150,000 vehicles per year. The funny thing is that development's already moving slower than expected, so they've quickly changed the forecasted completion date from 2024 to 2025. Even with incentives and grants from the federal government, scaling up production of electric vehicles is not exactly a cheap task either. And looking at their financials, we can already start to get an idea of how this situation is likely going to play out. In the first quarter ending in March, VinFast generated $83 million in revenues, and that's USD. The cost of sales, on the other hand, was $244 million, so it's a negative gross profit of around 200%. With total losses for the period around $600 million. You'd expect as the company's been ramping up production that those margins would start improving, but we really haven't seen much of a difference so far. Now, I bring this up because if they can't achieve anything close to at least a gross profit in Vietnam with lower labor costs and regulations, then how's anything going to improve in North Carolina? If anything, the losses are going to get even worse, which is exactly the opposite of what investors would like to see, especially when the company only has $158 million in cash as of March. And it's doubtful the cash on hand is looking much better here in August, since they only managed to raise $149 million in their SPAC deal. Most of the early investors in the SPAC redeemed their investments, so VinFast didn't raise nearly as much capital as they'd hoped. This company is a cash-burning dumpster fire with $3.5 billion in current liabilities, meaning they're due within the next 12 months. It's likely they'll need to raise even more money through debt or dilution if they want to survive, so they won't come even close to servicing all these liabilities with the cash they have right now. So the question is, can they scale before they simply run out of money or dilute the company into the ground? And even more importantly, is the demand even there for VinFast to gain global market share? And many of the influential publications in the electric vehicle space don't think so. VinFast is working on entering the markets in the Western world with 2 luxury EV SUV models, the VF8 and the VF9, and it's not looking good so far. There are plenty of scathing reviews about VinFast cars from critics complaining about uncompetitive pricing, lack of quality control, and even the design of the vehicles in general. They've already had to recall VF8s previously over a software glitch with the dashboard display. So we might see this company dominate Vietnam's market, but are they going to succeed globally? Well, not as things currently stand. So why did the stock price jump around 200 to 250% pretty quickly after VinFast started trading on the Nasdaq? Well, that likely has to do with immediate, uninformed hype and illiquidity. Clearly, people were investing without paying attention to the financials or vehicle reviews. But illiquidity fueled this pumping up as well. See, VinFast is just one division of the Vin Group, which is majority owned by the chairman and director, Pham Nhat Vuong. Through three separate companies that he majorly owns, he has control of almost the entire VinFast existing shares outstanding. He owns 99% of the company himself. This left a maximum of 0.9% of the float for investors to trade, so the stock is extremely illiquid for its market cap. On Thursday, the stock traded around $44 million worth of shares in volume and typically averages out to around $50 million a day. This is leading to wide swings in the stock price and likely leading to a perception that there is more interest in this company than there actually was, although it has certainly made a splash in public markets. The central question surrounding all these EV stocks, not just VinFast, is who's going to survive? That's all this market really is. Scaling in the automotive sector is so costly and there's so much competition emerging that the primary goal of these companies is just to outlast everyone else. This is a list of all the automotive manufacturers that have gone bankrupt in the US alone. With how much competition there is in the EV space already, it takes an incredible level of hubris to assume the one that you choose is going to survive. And there will be plenty of names added to this list by the time the EV market matures, and I personally would never invest in a sector like this, but the decision is ultimately up to you. While VinFast is a dumpster fire, at least it doesn't seem like an outright scam. The same cannot be said for another public EV company, Mullen Automotive, which I previously made a video about, and I'll link to that video in the description below if you're interested. Thanks for watching.